This is Nightly Business Report with Bill Griffith and Sue Herrera.
Earnings delivery. Business seems to be booming at the big banks. So why did investors run the other way and send those stocks lower? No relief. A perfect storm is swirling around the housing market as borrowers stretch themselves thin just to afford a home. Fueling a crisis. An in-depth report tonight on the role Bitcoin and other currencies are playing in the opioid epidemic. Those stories and much more tonight on the Nightly Business Report. It is Friday, the 13th of April. And we bid you good evening, everybody. I'm Bill Griffith. Sue is off tonight. Stocks finish the week lower today, and we will have more on that in just a moment. But we begin tonight with the banks themselves and how everything seems to be aligning for this important sector of the economy and the stock market. J.P. Morgan, Citigroup, and Wells Fargo all reported better than expected earnings this morning, in part because of interest rates that are creeping higher, volatility has resurfaced, and regulations have been relaxed. But the stocks themselves didn't react today the way you might expect. All three of them traded lower despite those solid results. Two big factors helped J.P. Morgan Chase quarterly profit jump by 35% to a record of almost $9 billion. Lower tax rates saved the bank almost $250 million, and rising interest rates, which helped push interest income up by 10% from a year earlier, as banks are now able to charge more for the loans that they make. Despite a move lower today, many analysts do think this environment can be a big plus for bank stocks.
In a rising rate environment, all you really need for solid double-digit earnings growth is low to mid-single-digit loan growth, because the rising interest rates give you a boost.
Citibank says the rate hikes so far have added about $80 million each in additional revenue, but it did say future rate hikes will probably compress that figure. Citi's profit hit a three-year high, up 13%, with a big boost from a 38% jump in equity trading sales. The uptick in the stock market volatility has been good for banks. Volumes are up, and trading revenues are up too. That has analysts upbeat ahead of the reports from the rest of the big banks like Goldman Sachs, Bank of America, and Morgan Stanley.
Equities is especially strong. If you want to play the equity strength, you want to move into Morgan Stanley. So we like that setup a lot. I think the stronger banks are going to continue to get stronger. And so I would say B of A and Morgan Stanley are set up quite well.
Wells Fargo's profit was better than expected, but revenue was down almost 2% from a year ago, as Wells is still dealing with regulatory fallout. It's considering a $1 billion offer to settle civil charges related to auto loans and mortgage rate fixing, a potential charge that may be holding its stock price back.
It's cheap for a reason, and it feels like a value trap, I think, to a lot of folks at this point in time. They seem to be in that dunce cap relative to the Fed, so it's tough to get excited. I mean, at some point, the stock price will respond, but right now it just feels like it's a bit snake bit as a stock.
Steve Dudash joins us now to talk more about the banks tonight. He is the president of IHT Wealth Management. Thanks for joining us, Steve. Always good to see you.
Good to see you too, Bill.
What's your version? Why do you think the stocks sold off as much as they did today, the bank stocks I'm talking about?
The bank stocks sold off because we all knew that this quarter was going to be the big quarter. Ever since the tax bill was floated out there last summer, we were all leading up to this point. And that's why you saw the bank stocks have a run up in the last 12 months. But it wasn't about what they did in the past. It's about what they thought they were going to do moving forward. We needed them to crush, which they did, but we need them to continue to crush, to continue to grow at the rates that they've been doing, 30% a year over year. You can't have that over and over again. So we need to see more strength. We are in a Goldilocks period right now for banks, so it's not unrealistic to think that, but you got to be particular about it, and you were just touching on it. Certain bank stocks like Wells Fargo have a whole problem going on that you kind of have to avoid.
Yeah, you would not touch Wells Fargo right now, right?
No, and listen, they'll get through this eventually. It's a good company long term, but they're kind of going through what Facebook's going through right now, and that is the regulatory eyes are all over them. They can't get aggressive with sales tactics on the inside of the bank, at least not for the next couple of years. So there's no way they're going to be able to keep pace with the JPs and the Bank of Americas of the world right now. We were on your show like 3 years ago talking about how good they were at the retail side, which they were great at. The problem is they were too good at it, and they were doing things that weren't, up and up. And because of that, now that's why you're seeing the pullback. So It's a value trap. You can't go after it just because it looks cheap. There's a reason why it's cheap.
Now we get more reports
Right now.
next week. Do you expect them to do as well as JP Morgan and Citibank did today?
Bank of America, you're probably going to see the exact same thing on Monday. You're going to probably see the stock pull back a little bit because it's going to say, we beat earnings, we did great, but everyone's going to be like, we knew that. What are you doing moving forward? I tell you this though, it's a wonderful sector to be in. You know, you pick a few of the stocks in there, you buy in on this little dip that's going on right now. The next year or two, they're going to be raking in money. I mean, you're going to see some huge profits out of that sector because of what you guys were just touching on. So if you're looking for a sector to get into, it's hard to argue with that area right now.
But so this is all dependent, or at least in part dependent on the Fed continuing to raise rates, right?
But they're going to. We all know they're going to. There's at least 3 more rate hikes going. The real question is, do they continue this next year? But the reality is, even if they don't do any more dramatic 3-in-a-year type hikes next year, with the tax regulation where it is right now, that benefits a company like a bank that much, and with the rate hikes, you know, your savings account rates aren't going up, but those loan rates are definitely going up. That spread is there. Take advantage of it. The reason why we haven't seen huge profits were, yes, some of the trading volume on it, the investment banking was down, but with all the extra flow that's going out there right now, investment banking is going to pick up. That's, you know how it is. It's choppy in that area. So take advantage of this little dip, buy in at some nice prices for the right stocks, and then move forward. I like them.
And we will do that now, as a matter of fact. Steve, always good to see you. Thank you. Steve Dudash with IHT Wealth Management joining us tonight. Bye. As for Wall Street, the decline in bank shares did push the broader market lower today, adding to the political and trade tensions that have been weighing on the market lately. When all was said and done, the Dow was down 122 points today to close at 24,360. The NASDAQ was down 33. The S&P down 7. Now, despite today's declines, the major averages were all solidly higher for the week. And by the way, oil prices posted their first weekly gain in 3 weeks, settling at their highest level, get this, since early 2014. Now, some of those trade tensions hit one stock in particular today, that is Boeing. But the rhetoric this time was coming from Russia, not from China. Lawmakers there in Russia have proposed a set of measures that could halt the supply of titanium to the aircraft manufacturer. The proposal is in response to sanctions recently imposed by Washington. Shares of Boeing were off more than 2% as a result in today's trade. General Electric is restating its 2016 and 2017 earnings due to new accounting methods. Now, the restatement is important to investors in this widely held stock because, as we've been reporting, GE has come under fire for its lackluster performance and big charges and an SEC investigation. Morgan Brennan has GE's new numbers for us. What do they tell us tonight, Morgan?
Well, Bill, I will tell you that in this latest filing, which prints out to about 32 pages, it is a lot of detail, it is a lot of numbers, but the takeaway here for investors is that GE is restating its 2017 earnings 17 cents lower per share than previously had been reported, and its 2016 earnings 13 cents lower than had previously been reported. What's perhaps most surprising in this filing that we have just received is the fact that they're also revising lower their revenue numbers for both of those years. It speaks to the fact that they have implemented this new accounting standard that is market-wide and that really requires many different companies to change the way that they're reporting revenue on long-term contracts. But they are also implementing some of their own new changes to their financial accounting and their methodology around that. And that, too, has lowered revenue reported for both 2017 and 2016 by several $billions. Why this matters right now? While Wall Street was largely expecting these numbers to come out and for the company to restate, it comes ahead of earnings, which we get next Friday, and which everyone is watching so very closely as the new management team in place looks to move forward on its turnaround for the struggling industrial.
Before you go, this is important, very quickly. These new numbers, do they say that these they're reporting these numbers now because simply of the accounting change, or in part because they were overstating earnings and revenue before?
I think the earnings themselves were restated because of this new accounting change. The company has been signaling that this would be coming for the last several months. I have actually seen this in other industrial companies that I follow as well over the last several years in anticipation of this new rule taking effect for 2018. That said, they have made some of their own changes, and we're seeing that play out in the revenue numbers that they've just restated for the last 2 years as well.
And we'll see how those earnings are next week. Morgan Brennan, good job. Thank you. Time to take a look at some of today's upgrades and downgrades. Netflix rating was raised to buy from hold at Deutsche Bank. The analyst there says that Netflix has changed the industry in a profound way, and in doing so, it has given itself a significant lead over competitors. Company reports earnings on Monday, by the way. Price target was lifted to $350 a share. Shares of Netflix today rose fractionally to $311.65. Starbucks rating was cut to market perform from outperform at Cowen. The analyst citing concerns about craft coffee competition and questionable customer loyalty. Price target was lowered to $65. That stock fell slightly to $59.24. Eli Lilly's rating was raised to market perform from underperform at BMO Capital. The analyst there backing away from negative stances that he's had on the stock for the past year, saying that many of the obstacles he previously cited are now priced in. Price target was raised to $79. The stock was up 43 cents to $79.72 today. And Dropbox, which recently went public, was started with a reduced rating by Nomura Instinet. The analyst cited the company's low rate of converting users into paid subscribers. The price target is now $21. The stock closed the day down 9% at $30 even. Still ahead, looking for stocks that could benefit from a stronger consumer and a growing economy? Well, our Market Monitor has a list of some names coming up. President Trump has ordered a review of the Postal Service. He issued an executive order late last night creating a special task force to examine its finances. The agency reported a net loss of $2.7 billion in fiscal year 2017. The president did not mention Amazon in that order, but of course he has been vocal about how much the Postal Service loses on each Amazon package that it delivers. Mixed signals from Fed officials today. The president of the Boston Fed said more interest rate hikes may be needed than the central bank now expects. Eric Rosengren believes that the labor market may tighten even more and that inflation is likely to run a bit hotter. The Fed has targeted 3 rate increases this year and 3 more in 2019. But separately, James Bullard, the president of the St. Louis Fed, he took a more dovish stance. He said the central bank does not need to raise borrowing costs much further, despite the recent reports of higher inflation, which he says were about as expected. Sticking with the economy, consumer sentiment recorded a bigger than expected decline this month. The University of Michigan survey slipped to a 3-month low amid ongoing uncertainties over U.S. trade policies, but we should point out that it is still remaining historically high at this point. Separately, a new report from the Labor Department showed that businesses posted fewer job openings in February than the previous month. In January, openings hit a record. The figures suggest a healthy job market in favor of job seekers right now. And it is that time of year with sentiment levels elevated and the job market tight. Many folks are heading out to buy new homes. But if you're going to an open house this weekend, hold on to your wallets. It's getting much harder to afford a house. Diana Olick has that story from Washington for us tonight.
In the heart of spring, it is the perfect storm. Home prices, interest rates, housing demand, all rising amid a critical shortage of homes for sale. It's slamming affordability and causing more buyers this spring to overstretch. Affordability is projected to weaken this year at the fastest pace in a quarter century, according to Arch Mortgage Insurance. Affordability, which is based on a homeowner's monthly payments, weakened by 5% in the first quarter of this year and could weaken by another 10% by the end of the year. Some markets will be worse. The average monthly house payment in Tacoma, Washington could increase 25%. In Baltimore and Boston, up 21%. Philadelphia, Detroit, and Las Vegas could all see 20% increases in the average monthly payment.
We keep thinking it's going to get better, and it's not getting better.
Teresa Taylor has been selling homes for almost a decade and says she is seeing more buyers than ever getting in over their heads.
We have some concerns when we see people putting so little down, a small earnest money deposit down, and you can literally see on paper, you could see them stretching to make this happen. And if there were more inventory, that wouldn't be happening.
And the risk keeps rising. The share of borrowers with debt payments of more than 45% of their income more than tripled in the second half of last year and continues this year, according to CoreLogic. Part of that is that Fannie Mae loosened its standards a bit, but clearly demand was waiting. The bulk of demand is at the entry level, but that's where supply is worst, while high-end homes are more plentiful.
Rising mortgage rates, rising home values over the next year, I think that's going to just increase, magnify that divide between what's happening at the top and what's happening at the bottom of the market.
Increasing the divide between the haves of housing and the have-nots. For Nightly Business Report, I'm Diana Olick in Washington.
General Motors is cutting jobs, and that's where we begin tonight's Market Focus. The automaker said that it plans to eliminate more than 1,000 positions at its Ohio plant due to falling Chevy Cruze sales. The location, which makes the compact vehicle, has experienced weakening demand as more consumers do shift away from those smaller vehicles to the SUVs and crossovers that everybody loves right now. GM shares off a fraction today to $38.73. PNC Financial said that its quarterly results were helped by strength in its commercial unit and by higher interest rates. Earnings at the regional bank were in line with estimates, but revenue came in a little light. The bank said that it plans to set aside more money this quarter for loan losses and added that loan growth is likely to slow. PNC shares were off by 4% to 145.46. And Tesla CEO Elon Musk said that he expects the automaker to be profitable and cash flow positive in the third and fourth quarters of this year. Musk also reiterated that the company would not need to raise additional capital this year. That upbeat outlook lifted shares of Tesla by 2% to $300.34. And Alaska Air reported a 6.5% rise in traffic in March from a year ago. The airline also gave an upbeat outlook for the first quarter overall. Shares soared by 6% to $63.95 today. Now to our weekly market monitor, who is positive on the economy. He has a list of companies that he says will benefit from strong economic growth and consumer spending. He is John Trainer, the Chief Investment Officer at People's United Wealth Management. John, welcome back. Good to see you.
Good to be here. Thank you.
Do you think that your feelings about the economy are reflected properly in the stock market right now?
Well, we think the economy is doing very well. There's a lot of give and take in the stock market right now, and actually we think there's a little excess nervousness in the stock market right now. If you just take a look at the economy, the stock market should be doing a little bit better, and we think that this volatility is actually giving investors a little buying opportunity in the market right now.
Well, let's look at three stocks that you like right now, and the first one, right out of the bat, Amazon. I can never remember a time when there hasn't been any skepticism about Jeff Bezos' company, but it seems to be especially high right now with the president tweeting about it all these days. You like Amazon here, I guess, right?
We like Amazon because if you take a look at what's going on in the retail industry, Amazon is dominating the conversation there. The transactions, wherever you're shopping, transactions are going online. Amazon is leading that. You're correct in your prior comment that some of the turmoil in Washington has given investors, we think, a buying opportunity in a very good company that's really positioned nicely for the years ahead.
And how important is its cloud business to your forecast as well?
The cloud business is critical. If you take a look at Amazon's income statement, almost virtually all of their income is coming from the cloud business. So we want to see the cloud business continue to do well. We think it will continue to do well, but that will support the rest of their business going forward.
We're focusing on the banks right now with them reporting earnings, especially the money center banks, but you like the regionals, and in particular you like KeyBank, right?
Correct. The headlines today were primarily about the larger money center banks, but we really think that some of the regulatory changes that are in process right now will help the smaller regional banks. The regional banks are also more exposed to the domestic economy. So, yes, the banks were hit today, but we think going forward, as your prior guest said, we think the banks are set up for very good earnings growth.
And finally, quickly, if you can, one of the grand old companies in technology, you like Microsoft here.
We do. When you see turmoil in the market, you tend to want to own the bigger companies, and Microsoft in our tech sector is one that we want to make sure is in every client's portfolio.
Well done. John Trainer, always good to see you. Thank you for joining us tonight.
Thank you. Thank you.
John with People's United Wealth Management joining us tonight. Coming up, how Bitcoin and other cryptocurrencies are being used to finance America's deadly opioid crisis. As you no doubt know, America is facing an opioid crisis. Overdose deaths are increasing, and so is the economic cost. And it's being fueled in part using Bitcoin and other cryptocurrencies. Ilan Mui is following the money in this special report for us tonight.
There's a new generation of criminals quietly driving the deadly spike in opioid overdoses. They're flooding the country with the lethal drug fentanyl, and they're hiding behind Bitcoin. Here in Utah, authorities accuse these crypto-savvy college kids of routing the fatal narcotic through suburban Salt Lake City while working at an eBay call center.
They were entrepreneurs looking for ways to make money. They are alleged to have gotten into a very dark hole.
A dark hole that started on what's known as the dark web, an encrypted online network where criminals can conduct their business. Sites like Google or CNBC.com, that's just a tiny sliver of the internet. Experts believe the dark web makes up as much as 94% of what's online. Access is fairly simple, but requires a special browser. Matthew Swenson is a cybercrime special agent at the Department of Homeland Security.
We're going to take a look at the Tor network.
He showed CNBC how easily the Tor network can disguise his identity and location.
There's going to be a series of relays, basically, which are different computers that the traffic is going to bounce in between.
And is that what makes it private?
Correct.
So people don't realize that we're in Fairfax, Virginia.
The dark web looks a lot like the open web. Sites such as Dream Market operate like eBay, but they sell illegal goods instead. Drugs are clearly displayed, and sellers even have star ratings. Their preferred method of payment? Bitcoin.
So this one, the unit price is going to be 0.475 Bitcoin, which right now is about $4,680. It looks like he only accepts Bitcoin.
While every Bitcoin transaction is public, no one can see who owns the coins. That makes it appealing to criminals seeking anonymity on the internet. But demand for both Bitcoin and fentanyl is so hot right now, dealers are spilling onto the open web, even offering discounts for payment in Bitcoin.
We need to continue to be diligent. And one of the ways that we do that is through our border enforcement security teams. We're right on the ground at these mail facilities.
Facilities like this U.S. Postal Inspection Station at New York's JFK Airport, where Customs and Border Protection estimates 40% of all fentanyl mail seizures go down.
Customs officers have to search all of these packages, either by hand or with one of the dogs over here, to find the fentanyl that people have bought online, usually with Bitcoin or another cryptocurrency, and had shipped directly here to the United States from overseas. They put the packages through an X-ray machine, and if they find something suspicious, they can open it up right here to see if there's a white powdery substance inside. Then they take it to a detention center where they test it, scan it, and figure out if it really is fentanyl. 2 years ago, Customs found 7 packages of fentanyl. So far this fiscal year, they found 150.
The majority of them are coming from China and Hong Kong.
And these products you're finding are being bought online?
Absolutely, using the dark web.
What kind of fentanyl are you seeing come through here?
The fentanyl that we're seizing here is about 90% pure. Just a couple of grains will create an overdose for you.
Ohio is ground zero of the opioid epidemic, and fentanyl is the leading cause of drug deaths.
Most of the guys are pretty cool.
Lucas, who asked us not to use his last name, overdosed on heroin laced with fentanyl 5 times before ending up here, the Mary Haven Treatment Center in Columbus. Lucas got his fix from a local drug house, the end of the line in a supply chain that's killing an average of 45 people a week in Ohio, a bona fide seller's market.
You would ask the dealers, where's the dope that's killing people? You seek that. because
You want
it's
the dope
stronger,
that's killing people.
basically.
Advocates for crypto tell CNBC their own studies show a different story.
Cryptocurrencies do not kill people. Opiates are killing tens of thousands of people a year.
But in Utah, Bitcoin is what authorities say financed Aaron Shamo's fentanyl enterprise, a supply chain that prosecutors suspect caused 28 deaths after users overdosed on his pills. When police raided Shamo's home and alleged stash house, they seized bags of cash and at least 500 Bitcoin, according to court documents. They were worth about $750 each when he was arrested.
They had alleged that they were going to forfeit it at some point. Usually you'd expect that to be done when the case is resolved, when a defendant is adjudicated. But in this case, the value of Bitcoins was going into the thousands of dollars, even over $10,000. And so the government came to us and said, this is a valuable asset. We don't want to lose that value.
Shamo, who declined to be interviewed, is pleading not guilty. His trial starts in August, and if convicted, he faces a mandatory sentence of life in prison. For Nightly Business Report, I'm Ilan Mui.
And you can read more about cryptocurrencies and America's opioid crisis at our website at nbr.com. Before we go, another look at the day on Wall Street on this Friday the 13th. The Dow fell by 122 points to 24,360. The Nasdaq was off by 33. The S&P down 7. But despite the declines today, the major averages did finish solidly higher for the week overall. That is Nightly Business Report for tonight. I'm Bill Griffith. Thanks so much for watching, everybody. Have a great weekend. We'll see you again on Monday.